Hello, and welcome to the latest edition of Edison TV. Today, we are delighted to be joined by Max Vermorken, CEO of Sigmaroc, a specialist quarry materials group that invests in both new and existing construction material assets in the UK and Northern Europe. Welcome, Max. Great to see you, and thanks for joining us.
Good to see you again.
Start off with, let's discuss your record full year 22 results. Sigmaroc has a visible track record of profit generation and accelerating top-line growth, bolstered by a diversified model both geographically and in terms of end markets. Can you discuss the key highlights of the full year 22 results, which clearly demonstrate this, and update us on 2023 thus far?
Yes, well, thank you very much for that question, because 2022 was a particularly challenging year for everyone, but we sailed through that with a lot of great results at the end. 540 million nearly in terms of turnover, over 100 million EBITDA, 8 pence earnings. That's obviously the P&L side of things. And if you then look through the cash generation, which was very strong, nearly 90% of cash conversion, 54 million in free cash flow, and a ROIC, return on invested capital, of 11, which trends nicely up towards our long-term target of 15%. All of these numbers are well ahead of plan and on target for our 3 to 5 year targets that we set not even a year ago. Now, the fact that we managed to get so far ahead of schedule is the points that you touched on earlier, which are the model that we run. So we have a quarrying business. We run this business as a series of smaller operations, platforms, 10 in total across Northern Europe. Our material doesn't travel far. That's actually quite an advantage for the industry we're in. That helps us to gives us barriers to entry and also, of course, pricing power. Now, in a year like last year, where you have barriers to entry, pricing power, and this agility because of proximity to the end customer through these small platforms, then you get really good results. And we could see that from the business's performance last year.
And can you touch on the company's geographic exposure and its range of products in both the industrial, mineral, and construction markets?
Absolutely. So we are present in 12 countries right across North Europe, so around the North Sea, and then around the Baltic states and the Baltic Sea. We have essentially 2 main components of our products. Either it goes as a rock into construction, and you can think about infrastructure works, big developments around the energy infrastructure we currently need, wind farms, solar panels, but also just streets and roads and bridges and so on. Standard housing, residential primarily, that's not an enormous sector for us. It's fairly small, specifically on country by country basis. And then the rest, the other half of the product, ends up as a mineral, as a ground product, primarily in industrial applications. So you think of making glass, making ceramic, making steel, making paper. Anything you touch on a daily basis, at some point in time, has our mineral in it somewhere. Even eggs, the shell of eggs is made out of the product that we make. And so it's an incredibly diverse set of end markets and diverse set of end products, which allows us to really manage our end markets well, especially in volatile times.
Now moving on to your recent acquisitions. The company recently announced the completion of 2 acquisitions, Gooijen's Concrete Group in Belgium and JD in Finland, for an aggregate consideration of £12 million. Could you discuss what opportunities these provide for the company and the commercial and operational synergies they might enable?
Yes, so these 2 acquisitions are part of a pipeline of about 10 deals we're currently doing. All of them are bolt-ons to existing platforms that we have. It is important in our industry to do these bolt-on transactions because they solidify the platform's competitive position, either because it brings in a new product, or it exposes us to a new high-growth market, or because we need further scale market share in these local areas. So these 3 strands we always look at. Gooijen's in Belgium is a typical example of expanding our footprint in the northeast of Belgium. It's a fantastic concrete business. It fits in very nicely with the 2 other concrete businesses we already own there. Gives a really nice network of plants, and then you get network effects and synergies out of this. Joani Dolomiti in Finland is a totally opposite example. This is very much for us to reach a new region in Finland where we are not present, and also a new product that we do not make yet, which is dolomitic agricultural lime, which is very essential in times where fertilizer is short to be able to treat your land in terms of pH control, in terms of water retention, which boosts the agricultural yield. And so two examples of true transactions, which are part of that group of 10, which either expose us to new higher growth markets or give us further scale in markets we're already present in.
And moving on to Nordkalk, it's your largest acquisition of Nordcor, the leading limestone company in Northern Europe, for a total consideration of 470 million euros, represented a critical milestone for the company. Can you discuss the benefits of this acquisition and its new organisational structure? And also, could you briefly talk about the compensation received from the Swedish government for Nordkalk's economic loss due to land use restrictions?
Yeah, so Nordkalk was our largest transaction in the history of the group, essentially. As you rightly point out, we did this transaction in the middle of 2021. For reference, we were at that point in time running on a sort of 4.5 pence earnings. The Nordkalk transaction and all the benefits it brought to the group allowed us to lift that in the space of not even a year and a half to 8 pence earnings this year, and we're trending nicely in line with that and higher in the first quarter of 2023. Nordkalk is a unique business. It expands the group obviously from a scale perspective, but it brings also additional product, additional skill, additional territory we're now active in. We, as a group, we like the agile structure that I mentioned earlier, where we run on platforms, small localized entities which address localized markets and are really differentiated from the competition because of their proximity, because of the additional service we offer, the fact that we are really close to our end customers. And we try to replicate that logic also within the Nordkalk business. And so we've split it up into 4 divisions, which are very much geography and product led, so that again, we can increase the proximity to our end customer, offer them the best service possible, and therefore be, from a financial and returns perspective, the best business you can have. Within the Nordkalk group, there was a piece of land that we bought to have further mineral access and further land reserves and mineral reserves on an island called Gotland, which is in Sweden. That land holding got turned into a nature reserve by the Swedish state. That happened back 3, 4, 5 years ago. The Nordkalk business at that point in time didn't agree with that decision because it was clearly quarrying land and a reserve holding there for further quarrying and further stone production. So we appealed that decision, which in a first instance won the court case against and got a compensation awarded by the courts to the business. So we're waiting now to see whether an appeal will be launched by the state, and we're also considering whether we should launch an appeal against this decision, because obviously the compensation being, even though it's a nice compensation, we had obviously filed for a bigger for a bigger number.
Sigmaroc recently announced gross proceeds of around £30 million attributable to its fundraise. How do you intend to use these funds to drive growth both organically and through strategic acquisition opportunities?
So for both these pipelines, we will use this 30 million proceeds. On the one hand, we're doing about 10 transactions, M&A transactions, which are these bolt-ons I mentioned, to expand every platform we currently operate. In pretty much every platform, something will be added on to again boost the competitive edge of that business. We're also increasing from an organic perspective the positions of our group. Be it new machinery, new plants, carbon capture systems, mills to use biofuels. Very much in a total spectrum, we look at how can we make our business more competitive to grow top line organically, constantly by a good percentage points every year, and have then that additional sales volume drop through to the bottom line to increase earnings and increase cash flow. And so this package of transactions really fits into that model, into that system, as we have done over the last 6, 7 years. The beauty of this set of transactions is the average acquisition multiple of these transactions is low. It's a function of many, many reasons. And therefore it felt to us as a management team essential to get on the front foot, acquire these businesses and have the strategic benefit and the financial benefit locked in. As a result, we went to our shareholders and asked them for a bit of support to buy these businesses.
And moving on to cost inflation management, it's been well publicised that inflation in both energy and wages has been a feature of the last 12 months. How has the business been able to mitigate these pressures successfully?
Good question. The industry we're in, and that's by design, and the business we've built, and again, by design, is structured in a way where we have a good level of pricing power and a good level of barriers to entry. And as a result of that, we were able to manage through dynamic pricing, through pass-through contracts, through real discussions with our customer base. We're able to manage these cost pressures quite effectively as a business. And so as a result of that, we've been able to have a very successful year 2022, in spite of enormous movements and swings from the energy front, even energy availability, logistics, other components like that, labor, obviously, all of these moved around quite dramatically. But the structure of the group and the quality of the assets allowed us to navigate that very successfully.
Max, how would you describe the future direction of the company now compared to what you were thinking in 2016 when you were appointed as CEO? Can you touch on your invest, improve, integrate, and innovate strategy as well?
Yeah. It's really nice to be able to sit here 6 years on and be able to point to documents from 2016 and 17, where we said we target a group with over 100 million EBITDA in North Europe with a decentralized model active in quarrying and specialist niche materials. That's effectively what our slide deck said in 2016. And 5-6 years on, we are exactly there. We are in North Europe. We have a fantastic business, beautiful assets. We're decentralized as I wanted it to be back then. We're exposed to high growth niche markets. We have the benefit of scale. We have the benefit of network effects. And the synergies that those bring. And so it's not always that you can say that that the business has really delivered on the strategy it set out to deliver against 4 or 5, even 6 years ago. And we captured that back in the day in these 3 simple terms: invest, not acquire, but invest. Invest in good businesses that you can improve subsequently. They're already good, but they can do better. And then once they have improved their operating capabilities, let's see if we can integrate them with some bolt-ons as we're doing currently. And obviously the innovate aspect came in a bit later on because we saw that ESG, materials, digitalization, innovation from all of these aspects is something that is not just necessary, it's also potentially very profitable for us. We could see that with the green block technology we developed and launched. We can see that now with the Aqualand partnership. And so the 4 strands of our philosophy: investing with businesses, improve them, integrate and get network effects, and then innovate alongside, seems to work well, and we keep doing that.
Finally, on sustainable development, the company boasts a progressive ESG strategy with a 2040 net zero target, expected to be met through a range of methods, including carbon capture facilities and its proprietary green block ultra low carbon product range. Can you outline the company's sustainability credentials in the construction material supply chain?
Yes, very much so. So when we started to look at the whole ESG side of this business, we thought, is there a way we can be leaders in this, and how would we achieve this? We boiled that essentially down to 2 main efforts that were required. On the one hand, we need to innovate from a product perspective so that we deal with the embodied energy, the embodied CO2 of the product that we have, both in terms of how do we generate energy that we need or electricity that we use to produce, so solar panels, wind farms, all that sort of thing, which we are actively doing. And how do we then, the product that we subsequently make, how do we make sure that that has less CO2 captured into it? And that's what we did with Green Block, which is substitute some of the materials that we use, develop technology where the embodied CO2 naturally goes down, 80% down in the case of Green Block for our concrete products. Now that starts to really resonate with the end customers we have, very much so with big infrastructure developers who have themselves very strict net zero and green agendas themselves. So that works very nicely. The other side or the second strand is some of the processes we have inevitably will always emit CO2. You cannot get around that. it's actually a more fundamental question. If we want to make steel, and if we want to make paper, and if we want to use glass and porcelain and all the rest for our daily lives, we will have to have a component called quicklime. It's essential for its production. How do you then deal with the emissions that quicklime brings? And that's the aqualung CO2 capturing side of things. We went out very aggressively to find what's the best technology, which is least invasive, modular, small in scale, it can be quickly applied, where we can capture our CO2 emissions quickly and deal with the CO2 problem well ahead of anybody else. And that's the aqualung partnership we've now launched. We're extremely hopeful that instead of being net zero by 2040, that we can bring this date to 2030 or 2032 or something like this as we roll this aqualung structure out. All ongoing currently, updates to follow, but I'm quite excited about what we can do.
Very well. Thank you so much, Max, for your time.
Thank you again for talking to us.